2002 fiscal year began on October 1 of 2001. The gold price, $290. Gold price today, $2,700. That's a 9x increase. You can also look at it and say your purchasing power, as measured by gold, has fallen by 9x. Gold price up 9 times over the last 23 years while this has gotten out of control. So what is it? Another 9 times in the next 23 years. Elijah, what's that? 27,000? That protects you. That's your hedge. That's why, again, if your advisor hasn't suggested you get some, I think you should find a new advisor. Just take it upon yourself and get some.
In a striking testament to currency devaluation and economic transformation, gold prices have charted an extraordinary course over the past 2 decades. Financial analyst Craig Hemke, founder of TF Metals Report, has meticulously documented this journey, highlighting gold's dramatic rise from $290 in 2002 to its current levels of around $2,700, a 9-fold increase that powerfully illustrates the erosion of purchasing power across global economies. In the opening years of the millennium, gold maintained relatively steady prices, averaging $271.19 per ounce in 2001. Similar levels were recorded in adjacent years, $290.25 in 1999 and $272.65 in 2003-2000. This period of calm would ultimately serve as the foundation for an unprecedented 2-decade bull run that has fundamentally reshaped gold's role in the global financial ecosystem. Recent market dynamics have highlighted gold's volatility. Spot gold is trading at $2,633.99 per ounce, up 0.3% after reaching its lowest level since November 18th. U.S. gold futures show a 0.6% gain at $2,634.10. However, the market recently saw its most significant single-day drop in over 5 months, a 3% decline driven by potential diplomatic breakthroughs in the Middle East and shifting U.S. political developments. Hemke highlights an anomaly in which, despite falling bond yields typically prompting algorithmic trading systems to buy gold futures, driving prices higher by $30 to $40, recent market movements have diverged from this pattern, reflecting the growing complexity of current market conditions. Looking at 2024's performance metrics, gold is a premier commodity sector performer, boasting year-to-date gains exceeding 30%. This impressive rally draws strength from various factors, including heightened geopolitical tensions and uncertainty surrounding the U.S. election cycle. Despite significant bond market rallies that have caught momentum funds off guard, gold continues to reinforce its historical role as a safe haven asset, even as it navigates the complexities of modern financial markets. Before we dive into this video, please remember to subscribe to our channel, hit the bell icon, and share.
Bond market is rallying like crazy, which means yields are dropping. And that typically prompts the algorithmically programmed trading machines that make up the majority of the volume this time of day, usually prompts them to buy gold futures and not sell. And then, of course, the dollar index sees that, or traders or machines or whatever that see those lower interest rates, they sell the dollar. And so the dollar index at one point today was down almost a full point. You put that together, you might expect gold to be up $30 or $40. But it's the other way around. Now, yeah, okay, is there a safe haven bid that's coming out? I mean, how much of gold's rally, even just last week, was due to Hezbollah and Iran? Not buying that one. And I sure don't think the situation in Ukraine has gotten any less scary. And so, I don't know, by deduction, I settle upon just the old bugaboo, which is COMEX option expiration day. This one in November for the December contracts is the one time all year that the front month is both gold and silver, December gold, December silver, and options on those contracts expire at the Monday COMEX close here on the 25th. Those contracts then go off the board and into delivery on Friday, which means you get these massive rolls of positions and spreads that are legged out and taken off and moved from December into February or December into March as it is for silver. And it just makes it very easy to see price move in ways that are unexpected. It is what it is. I've been covering this stuff for 14 years. And I think even on my site today, people are like, I don't understand. Why do we put up with this stuff? Put up with this stuff because, again, this stuff is an inefficiency. It's illogical. Gold has done a fantastic job of protecting you against the onslaught of currency devaluation, and it will continue to do just that. This other stuff, while maddening and frustrating, 2002 fiscal year began on October 1 of 2001. The gold price, $290. Gold price today, $2,700. That's a 9x increase. You can also look at it and say your purchasing power, as measured by gold, has fallen by 9x. So, unless you think all of a sudden this is going to change, and it can't, the government cannot, they would absolutely destroy liquidity if they tried to run a surplus again. It would be an absolute, it's not going to happen. 100% promise everyone listening. Any politician says, yes, we need to balance the budget. They're either don't know how it works or they're just full of crap trying to buy votes. This will continue, okay?
Craig Hemke has predicted a potential double bottom for silver, with support and resistance levels around $29.50 to $30. He expects a dip to this range before a subsequent rally. This forecast aligns with recent market behavior. Silver prices dropped on Monday, trading at $30.81 per troy ounce, down 1.36% from the previous Friday's price of $31.23. Silver has experienced a 29.47% increase despite this short-term decline since the beginning of the year. Hemke's outlook is influenced by the broader market dynamics, particularly the weakening of the US dollar, which could drive increased demand for silver, further supporting its price in the months ahead. Hemke also notes that December typically sees strong market performance, with gold historically posting strong returns this month. This seasonal trend could also favor silver, considering its correlation with gold. December is also generally a strong month for the stock market, with many stocks exhibiting impressive performance. For instance, certain stocks have rallied by at least 4.5% on average in December over the last 15 years, moving higher at least 75% of the time. This consistency reflects December's seasonal strength, suggesting a favorable environment for silver and other commodities as the year concludes. As the US dollar weakens due to market optimism, silver, priced in dollars, could see increased demand, potentially propelling its price higher in the coming months. Let's get back to the interview.
Just smashed for about 6 or 7 days after the U.S. election. And we had a nice recovery last week. But by Thursday of last week, I started warning everybody on my site, we got all these expirations looming, okay? They were not just going straight back up to 2,800 in gold from here. Just because, we've seen this hundreds of times before, and now we're getting it today. My expectation, again, I told everybody this last week, I think gold had moved far enough. It was up $130 last week, up every single day last week. It moved far enough that I don't expect gold to make a lower low relative to those kind of washout lows back on Thursday, I got to do the math, 14th. We got down to 25.41 early that morning. I'd be really surprised if we got down that far. The momentum indicators were so washed out that morning that even if we did trade down to, you pick it, 25.25, you'd have what the technicians call a positively divergent low where price goes lower, but the momentum isn't nearly as bad. So that would be a low. But again, I don't think we're going to go that far. That's another, $70, $80 down from here. I think we're just going to now have the first higher low in a recovery. Silver, though, on the other hand, I told everybody last week, I said, I would not be surprised to see a double bottom. There's a lot over just even the last 6 months, a lot of either support or resistance at 29.50. That's kind of where I think we're headed. We got to 29.71 back on the 14th. I wouldn't be surprised if we head down somewhere between 29 and 30 again, just to freak everybody out. And then you get in a rally. The economic data, I suspect in December will not be as strong as it was prior to the election last month and all the other months so far this year. December seasonally is a very strong month, Elijah. We haven't had a down December, I think, since 2016. Beginning in 2017, we've been up every single December. It was only 1.5% last December, but the average 2017 through 2022 was about 4%. And we all know January is usually a good time as well. So again, started thinking that this, we probably get a pullback this week due to all these COMEX shenanigans. But I think then to finally answer your question, I think we rally in large part through the month of December. We finish up what is just a fantastic year, especially in gold. And then we look forward to next year. 400 ounce bar. When Nixon suspended the convertibility of dollars into gold, closed the gold window, however you want to put it, price $42. Okay, this was about $14,000, $16,000. That's what this cost you. Okay, you need $16,000 dollar bills to buy one of these. Fast forward 25 years. Now we're into the late 90s. At that point, it takes a little over 100,000 US dollars to buy one of these. Same bar, okay? Fast forward to today. Elijah, what's 2,700 per ounce times 400? Brother, that's 1.1 million. So we've gone from when Nixon cut loose the dollar, about $11,000, $12,000 would buy you one of these babies. Now it's 1.1 million. Has this changed? Is there, Elijah, is there like a hedonic adjustment that the Bureau of Labor Statistics could say this is a much more efficient gold bar? No, it's the same freaking thing. It just now takes $1.1 million to buy one. Okay? The gold hasn't changed. Your purchasing power has changed. Which is why you have to have, you can't buy, unless you got $1 million, you're not going to buy one of these babies, but you can certainly buy whatever you want.
Gold and silver's outlook remains strong despite recent fluctuations. December historically has been a strong month for both metals, and with the US dollar weakening, they are expected to benefit. Their roles as hedges against inflation and economic uncertainty should continue to drive growth in the coming months. Do you think gold and silver will continue to rise, or are we in for a pullback? Let us know in the comments below. If you found this video insightful, don't forget to like, share, and subscribe for more updates. Thanks for watching.